All right, so it looks like Western and Eastern silver prices have decoupled drastically to the point where we have $7 to $8 premiums, which is the difference between the COMEX price and the Shanghai Gold Exchange price. And that definitely, my friends, is telling us something and it's worth talking about. Okay, so I want to take a minute to share some thoughts in reference to just price action. And so literally we're witnessing a historical event in silver as silver continues to be driven upward in renminbi terms, not in USD terms. And so clearly the Asian markets is setting the pace and the tempo for this gold and silver rally. And silver is moving way faster than gold in reference to the backwardation terms that's being given out there as far as the physical from the futures. And so I wanted to share with you my 2 cents on this, as well as give you some future predictions and thoughts worth considering, given that as the 2025 year comes to an end, we're going to witness a 2026 that will be something of unprecedented magnitude. Because remember, in January, China will restrict the amount of silver and other metals that they will allow to leave the country, therefore putting more price pressure upward on gold and silver, as well as a couple other metals. So let's just jump right into the headlines here. So this is what we have here. Silver and gold closed before the holiday season here in the West. And as you can see on the screen here, silver last is reported at $71.91 an ounce. And so leading into the market closing, it was trending upward. They tried to slam it, didn't work, but $71.91 is what it is in USD terms. And so the way I'm going to position this video here is referencing the importance of distinguishing between the currencies that's driving the current spot price. And so for the last 50 plus years, ever since the COMEX futures market opened up in 1974, everything's been priced in USD terms, and silver and gold being considered commodities, not necessarily monetary metals, aka money. But what the renminbi is indicating to us is that literally, because of all the pressure and the sense of urgency by the world to diversify outside of dollars, the price pressure upward is being driven in yuan, aka renminbi terms, and the dollar or USD spot price of silver is lagging. So therefore, we can expect the gap to close as more pressure on the futures paper contracts are in play. So what do I mean by that? Let me get right into the primary subject matter here. So as always, this is some information given to us. This is the actual truth of the matter. So here we have China Shanghai Gold Exchange and Shanghai Futures Exchange daily report, and this is as of today on Christmas. And by the way, Merry Christmas for those that are acknowledging the birth and the gift given to man, which is Yeshua himself. But I'll get into that in a moment. But as you can see here, right above my head here, this is what we're looking like as markets closed on the 25th in China. And so literally the primary thing worth considering is that as of now, if you look at the price above my head in USD terms, it's $77.38, and it's up almost half a point. But yet it's the renminbi price that is worth paying attention to, because every other nation outside of the Western Hemisphere that deals with the LBMA and the COMEX, they are referencing the renminbi. And so as of right now, it is 17,414 renminbis for an ounce of silver. And that price right there is the driving currency for this movement that we're experiencing right now. And of course, as you can see, when exchanged for USD, it is 77.38. And so that, my friends, is extremely important. And the reason is because every single contract, every single agreement that China has put in place to settle their physical spot gold and silver with other nations, it's all denominated in the renminbi. And so having an account with the Shanghai Gold Exchange, if you're Saudi Arabia, if you're any of the Middle Eastern countries or any countries in the global South that have access to the Shanghai Gold Exchange, they're not doing it in dollars. They're doing it in the renminbi. So therefore, everything that they do, whether it be to redeem some of the contracts or to actually, as China's trying to do, they're trying to get people to store their metals in Asia and referencing that renminbi price there. So everything that's being done in the free market is denominated and driven by the renminbi price. And so what does that do? It puts more pressure on the Western Hemisphere to try to keep up with this future charades, because the arbitrage opportunity is tremendous. And so if over here we close at $71.91 and over there it's $77, $78, that's $6 or $7 difference there is an opportunity for metals to flow from the west to the east and be able to capture that spread there of the premium between the spot price east versus west. And so literally it's pressure like this that will put the US in a very tight spot because they can no longer control the narrative because it's being driven by the renminbi. And of course, Asia's leading this charge, aka China's leading this charge. So every other nation will follow and jump on board this train here, therefore creating more of a crave to hold physical gold and silver at this current moment. And so literally the paper charades game from the West is done. It's unraveled. And that's why I mentioned the other day in a report how the US bullion banks are now going long because they have positioned themselves in a comfortable spot in physical and hedging long so that as they ride the renminbi wave of silver and gold being priced, they're going to benefit as well in USD terms. And so as you can see here, this is all one big global bullion banking conjured plan, in my opinion, because the West has lessened up their control of trying to cap the metals, and now they're positioning themselves to benefit from the rise of it being driven by the renminbi. So just a couple other things here worth sharing with you guys is worth touching on. And so a very good account worth paying attention to is a silver trade on X. And so here I'll share with you some of the things he's put up, which I think gives a good account as to events happening in real time. So silver trade, go check them out if you guys want to subscribe, get real content based upon spot price in real time. But here we have Shanghai physical future silver premium explodes to over $8 an ounce, signaling tightening supply in Asia. So literally, excuse me, got a little cold. But what he's signaling is that within China, the spot and the futures is $8 separation, meaning that more people are trying to get the physical side of things today rather than waiting for in the future to grab it, because it's more than likely going to be higher than 78, 79, or whatever it is currently at spot price, or 77 as it closed there. But to give you some insights here, it says on December 24th, the physical silver price of Shanghai Gold Exchange closed at 78.49. As physical silver premiums over the COMEX silver futures price explodes to $8. So once again, that is a difference between the West and the East. It says this widening gap between Asia's primary delivery market and the Western paper futures benchmark highlights growing strains in global silver supply chains. So literally, there's not enough physical available at the current price. So therefore, that spread will continue to widen because the West will do whatever they can to try to paper over the game, but it's no longer working because the renminbi and the Eastern Hemisphere is driving demand like never seen before. So therefore, the current price action is small compared to what will eventually come, because you better believe after this Christmas season here, going into Sunday, we're going to see $80 silver in Shanghai. And of course, when the markets open up on Monday here in the US, what do you think is going to happen? The US spot price will have to catch up to the Shanghai price. So what does that mean? We're going to see on the COMEX, they're going to try to slam the price down as much as they can, but opening up here in the West is going to be $79, $80 or more. It's going to drop down a typical, 1% that they try to slam it. It's going to be like $79, $76. And then as soon as the markets open up, get midday here on Monday, it's going to be 80, 85. It's going to go even higher than what it closed at in Shanghai. And so it's this type of stuff here that will not be talked about on mainstream media. It's this type of stuff here that really shows the continuous demand for silver, because it has been the most suppressed monetary medium in human history, and we're nowhere near true price discovery, just because there is no ceiling to how high silver and gold can go, because we haven't even gotten into the bottoming out of all fiat currencies. We're just literally witnessing the bottoming out of things being priced in USD, because the world have already switched to alternatives, and the renminbi, aka the yuan, is driving the train when it comes to price discovery in metals. And so at 17,000 right now or so renminbi for an ounce of silver, that's peanuts, because you got to also consider their total monetary base is to the tunes of trillions upon trillions. And over the last year or so, because of the economic situations that they're experiencing, they just created additional trillions to try to prop up their collapsing housing market, collapsing, internal issues that they're having. Because once again, every government's in the same boat. You can only try to paper over problems as long as you can, but every single currency unit, every single fiat currency unit will be held accountable, and it will be reflected and the actual spot price of an ounce of gold and silver first and foremost, because they're world necessities. The world can't function without these two metals in particular being used in industry, health, and things that haven't been invented yet. And so because of that, it is never a bad time to get physical, because right now silver at 71, plus the premium that you're gonna spend to get it, it's never going to get cheaper, because even if they stamp the price, it won't be that actual spot price, because you won't be able to buy it for that, in my opinion, perhaps ever again. So this is just me taking my 2 cents, sharing it with you guys, but giving you future predictions on what's coming. So whenever you can get a single ounce or a fractional ounce or half an ounce, 1/10 of an ounce of silver, that'll be better than sitting around holding a bag of fiat currency, knowing that pretty soon the spigot cuts on, every central bank's gonna flood the world with paper. And therefore, you don't want to be the last person holding the bag, literally. But as always, just taking a minute, share my 2 cents. If you found value, hit that thumbs up, drop a comment down below, let me know your thoughts and future predictions. And then also feel free to scroll down in the description for any resources as well as opportunities for people to take advantage of what's happening, because there's no greater time to be in the silver business other than to have your own store, as well as having your own links to share with family and friends as they come running to silver, so that you can help them get your weight up and they can get theirs up. But other than that, be blessed.